Hi, welcome to this video today, which is on 26th of July. It's Sunday. We're just going to be looking at two pairs today, AUDJPY and EURJPY. Now, in terms of our fundamental analysis, both the AUD and the Euro have run too far away from the big fundamentals. We have bullish sentiment extremes in both pairs, with speculators heavily long the Euro and the AUD. We're coming in to a big level of weekly resistance in both pairs, and we think there's going to be a trend reversal. Both pairs excellent risk to reward trades in our view, so let's go and take a look at them. But just before we do so, please do keep in mind it's my view as of this specific moment in time. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the two we're going to look at right now, just click on the link beneath this video and you'll get live access to our member centre. Also, you can follow us on Facebook and join our Facebook group of traders. Right, the pair we're going to look at first of all is AUDJPY. Before we do our levels of entry, stop and target on the daily chart, let's take a look at the big weekly resistance level. Right, AUDJPY weekly chart, and in terms of the level, it's 77 on the weekly chart. We did spike through it here and immediately recovered. Then we fall through the level, come up, double top into the level, try and get back through on that blue, can't. Then we fall away. We have a really big rally in the Aussie with this big blue here, big high volume candle, can't get through the level, it's rejected. And then we come up in a slower fashion, we poke at the level on that blue and we finish off the high of the week. So you've had three major tests of the level. It's held since May 2019. We think it's going to hold, and the Aussie is going to go to the downside. Now we're going to go to the daily chart. Just going to go through playing this in terms of entering the trade and also go through the big fundamentals and sentiment behind the chart. AUDJPY, obviously a big bull trend. We think it's going to exhaust. I'll do my technical entry, stop and target in a moment. But let's have a look at first of all at fundamentals and sentiment. This is the reason why we feel the Aussie is going to find it really hard to close above the 77 level. Of course, it might, but fundamentals and sentiment to us look bearish. Aussie has really been supported by strong commodity prices. Let's just take iron ore, the major export, up 21% in 2020 alone. I think that's better than gold, isn't it? Copper prices, another major export near 2-year highs. Whichever metal or commodity you look at, Australia exports, it's been pretty firm. However, what we can see is speculators heavily long, for example, iron ore and copper, and prices are peaking. Iron ore made a new near-term high that got rejected quite strongly. Copper zoomed to the upside. We're now seeing prices top out. In our view, speculators are going to get taken out on stop. They push prices too far to the upside, and a clue that we could see commodities coming down comes from Baltic dry freight, which is what you pay on ships to basically transport dry commodities. Now, in terms of shipping rates, they're falling. That means that commodities are being shipped at a lesser rate. Now, the market or traders generally have been bullish of the China economy and the global economy. And if you look at China, a lot of people are saying it's going to do well going forward. It won't. It's an export-led nation. Its exports have dried up. Chinese economy is actually slowing. Global economy, all this talk about a V-shaped recovery, it's not going to happen. So commodity prices for us are going to come down. They're going to come down to more realistic levels to basically reflect the true supply and demand picture. That is going to weigh on the Aussie. Aussie dollar is also very correlated to stock markets, particularly the S&P 500. But the AUD can make no new high when stocks crossed 3,200. So just very quickly on the chart, tested 3,200 here, came off. We moved above 3,200 here, can't get to a new high. So the stock market correlation seems to be weakening, and we think stocks, they could go a bit higher, but I just don't see that giving the Aussie much support now. I think stocks are probably going to chop around in a sideways fashion. If they fall, then we're going to see, obviously, the AUD fall as well. Smart money on the COT have started to sell the Aussie dollar. They were heavily long down here. They've got rid of their longs, and now they've started going short. Speculators are buying. We take that as another bearish fundamental. In terms of the yen, most oversold major, and support from now on will come from its current account surplus. It's so oversold, the current account surplus is there. That will support the yen. Obviously, if we got risk off, we got risk on really for the last few months. Risk off would really boost the yen. Now, in terms of the chart, it's pretty simple for us, the way we see it. There you go. So there is resistance, trying to take it out on that candle. We do clear those two candle tails there. Come back below the level. The red rejects, lower high than that one, and we fall to the 75 level. So you got trajectory there. Okay, so 3 lower highs, sitting right on a 20-day moving average, and a round number, which we like. There's the previous breakout point. Okay, so you've got to come through 75, so say 74.70, and then I think we'll be off to the downside. Any rallies above 77 likely to be rejected. Where should we go to just to correct the overbought condition? I think you'd say this level here was a big one, 70. Okay, but really I'm looking, because the Aussie is so overbought, the yen is so oversold, I'm really looking for 65. Where does your stop want to be? Wants to be back here, well clear of that tail. So yeah, Aussie dollar to us, if it breaks lower, good sell. If it goes higher, and we did get above 77, we probably look to just sell back through the level. Okay, so good looking risk reward trade. If it got to 65, obviously it's got to get there. That would be a gain in percentage terms in favor of the yen of about 14%. Yeah, the Aussie, it just looks like we're running out of steam. And when we came up here, that big rally there, or big surge, Bollinger Bands volatility, high. When we came up here, see the bands, they're narrow, the volatility, basically lower. I think the buying is going to exhaust. Aussie going down, we shall see. Right, let's shift over now. Take a look at EURJPY, and we'll do the weekly chart just very quickly first. Right, EURJPY weekly chart just very quickly. And in terms of the break here of 124.40, it occurred in May. Very similar, obviously, to AUDJPY. We don't really get back to it until recently. We get that really big rally, and that big high volume blue candle hits the level, rejection, come up again. We're still pretty firm on the week, but still below the level. We expect it to hold. So a big level to get through again. Let's go to EURJPY Daily. Just look at the fundamentals of sentiment very quickly. Draw a level. Right, EURJPY Daily. We do see the big surge up in the euro there. Recently, we've come back to try and take out get to new daily highs. So we just kind of had a red candle on Friday, but we did exhaust back up. Okay, but we're still red on the day. Now I think it's going to be hard for the euro to continue to firm because of the fundamentals and sentiments. Just very quickly, the markets bought the euro over the last week or so due to the approval of the EU Rescue Fund. Now, in terms of that Rescue Fund, made comments in the Member Centre on the Facebook page, too little, too late. But I think the market just relieved that they actually did pass something, and it didn't end in gridlock. It's not going to help the zone return to growth at all. Traders are just way too bullish of a eurozone recovery. Many looking for the eurozone to have really good growth next year. It can't, because of the huge structural problems that remain in the zone, with Spain, Italy, Portugal, etc., still in deep trouble. The money being allocated by the Rescue Fund is not enough. You're not going to see good growth in Eurozone, but market's discounting it, so it's kind of in the price. We've seen smart money on the COT starting to sell the euro hard, where speculators come in to buy. So we take that as a warning that the euro is overpriced. Both countries have negative rates, okay, or both currencies. And Eurozone are really ramping up their stimulus, which is bearish for the currency. It's going to cap the rally. Yeah, I just don't see too much more euro strength. Of course, we could see more strength, but I'm looking for a move to the downside. Now, in terms of, you can see the spike high there. And look at it, we come up to poke it again, fall down, and then we come back, but we're red on the day. Trajectory. Where would I sell this one if I wanted to come in short? I would basically sell it through 123.50, because I think, yeah, this exhaustion here is kind of the last buying coming in. It's half-hearted on the dip, so to speak, and yeah, it goes back through 123.50. I think we're going to the downside. I put a stop behind the 125 level, so I'd give it a little bit of room in case we get one more spike to the upside. Where should we go? Well, should go to 120 in my view, and then really I think we'll go on to 118. So basically where the rally really accelerated. If we get risk off, we'll go lower because that will support the yen. But yeah, from here I think there's about 500 pips potentially of downside. Obviously the first target's on an entry of 123.50, 350 pips. The risk against the reward is pretty good. So yeah, so I'm looking obviously for the AUD and that euro to fall on the JPY. JPY for us is a buy in numerous pairs longer term. Yeah, it's very, very oversold, and due a good rally. I particularly like these two pairs. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.